Hi, everyone, and welcome to our live webinar of Smart KYC and Loan Automation Drive Growth in Lending Groups. I'm Maria, and I will be your host. Before we jump in, just a quick reminder, we'll have a demo later in the session, and you'll also be able to ask your questions anytime in the Q&A box. And we'll try to cover as many as we can during the Q&A section of the webinar. Now, I'm thrilled to introduce our speakers, Svetlanka Sergeychuk, CEO and co-founder of Neofin, a lending automation platform that's redefining speed and efficiency for financial institutions. Under Svetlanka's leadership as Chief Operating Officer, Neofin has extended into 13 countries across North America, Europe, and the Middle East, and continues to grow. Svetlanka devoted the last few years of her life to helping lenders bring innovative, human-centric loan products to life and oversaw over 20 loan product launches personally. And Dr. David Lamiashvili, CEO and co-founder of Identomat, an AI-powered platform delivering end-to-end identity verification and KYC compliance for over 100 organizations in financial and other regulated industries in over 20 countries. David has led the creation of Digital Trust Summit, a premier digital trust and compliance event in Eastern Europe. All right, let's jump right into it. Svetlanka, how about you briefly talk about the current market challenges faced by lending groups?
Absolutely. I would love to talk about the current trends and challenges faced by Lending Group. Thank you for this amazing introduction. And I am going to quickly share my screen. Just let me know if you see it already. Okay. So we're speaking today about the Smart KYC and loan automation and how they drive growth in international lending and lending groups. Firstly, I wanted to cover the market trends. First, market trend that we see in the worldwide lending, operating with the lending institutions across the globe, in Europe, in the North America, in the Central Asia. One that we see is consolidation when the groups are being created, and the lenders that have started with the operating with one loan product are joining and are being united in the groups and start running and launching the loan operations in multiple markets. Taking the US market as an example, many of us know the story, for example, of SoFi that started as a student loan platform and then grew to multiple offerings. The other trend that we see here, the business trend, is the creation of financial and lending super apps. When one lender, one operator is willing to cover all the financial needs of the consumer, starting with some instant cash, getting into more long-term investment commitments, and this leads to creating these solutions that are supporting multiple product offerings and that are supporting multiple types of solutions for multiple types of audiences. And there are the technology trends, which are the embedded lending, the AI in lending, and of course the lending for the underserved groups as the credit data is being developed further and further. Moving forward, what are the challenges of to put up with these trends? One is the regulatory complexity, because if we speak about the lending operations that are being launched in various markets, in every market there are varying KYC and AML standards. There are different data residency laws and local hosting requirements. And there are different requirements in terms of the interest rate caps and lending rules restrictions. What are the modern lender needs connected to the compliance to overcome these challenges, and what to look for in the lending infrastructure? One is adaptability. So you might want to look for the flexible product engine to adapt to new product settings and requirements from the regulator. Number two is adaptable decision engine, because the decision engine needs to firstly adapt to all the new types of alternative credit data that is coming up and that allows for serving the underserved segment and serving the previously served segments better. The adaptable offer generation engine, where every consumer, even within one loan product, can receive a personal offer that is compliant with the user's affordability, and compliant with the user's risk settings. Another group of things that are required in terms of the compliance for a modern lender in their lending infrastructure is the industry-proven security. What we absolutely recommend at Neofin is following the international security standards and international certification rules such as ISO 27001, SOC 2 certification, GDPR for Europe, and certain, I would say, hygienic security actions that we do at Neofin and that we totally recommend as a best practice, which are the vulnerability scans, the yearly audits by independent certifying parties, the DDoS protections, the cyber, and always having an up-to-date cyber and data risk covered by the insurance. And another important point is basically architecture. I would say it's like one of the underserved but super important parts of the lending infrastructure, underestimated but super important parts of the lending infrastructure that is very important for the lenders to operate compliantly, because the way the resources are allocated, the way how the response times are managed, also directly impacts on how compliant the operations are. Another important thing, an important challenge to handle for the lenders is multi-geography deployment. So the lending infrastructure needs to allow for deploying in various areas, following the data residency and hosting rules, because in many cases these data residency rules are going to be strict, where the credit data, sensitive data, financial data cannot leave the borders of the country, and the lending infrastructure needs to have the workarounds for that. Today we're going to talk about the unified lending flows, where the KYC flows are naturally embedded into the lending flows. And for this, every lending infrastructure needs to have its integrations climate. And here, just based on the example of the US market, I'm providing on the screen an example of this integrations landscape that we've built out, for example, for the US market, where for every part of the lending operations, including the payroll, for example, and accounting data, including the CRM and SMS gateways, including the KYC liveness and so on, the system needs to be open and needs to allow for the external integrations. And this is where Neofin and Identomat partnership comes into play. And today we will be showing you how the unified workflow can be built, where the KYC is the naturally embedded part of the overall loan automation. And the last but not least is decisioning. So underwriting and decisioning of your platform should adapt for diverse product and geography requirements. It should support multiple criteria types. It should support for data for multiple thousands of data attributes and allow for creating the new ones. It should allow for a personalized order setup and setup of the product routing. So here's just a quick glance on the integration of the on the current challenges and the trends in lending, how lenders can address that through the lending infrastructure. And here now, as we're focusing on the very important and responsible part of the loan products journey, which is user onboarding, which is the first impression of the user, it's directly related to KYC. And here I'm happy to pass the microphone to David, who will dive deeper into the KYC aspect.
Thank you, Svetlanka, and thank you, Maria, for a great intro. I'm super excited that we're talking about basically unification, benefits of unification, as well as, each separate part of what's involved in lending operations. Let me also share my screen. As you mentioned, rightly so, customer onboarding is a crucial part. It can't be overstated, the importance of it, right? That is why over 70% of users express that customer onboarding, fast access to products and services is one of the most important aspects of their experience with the product. And as someone who is involved with providing KYC solutions, which is a huge part of regulated customer onboarding and often a bottleneck part of it. We take it to our heart, basically. Usually, let me see why this is not okay. So let me give you a brief kind of rundown, right? Like most of us attending this webinar know what KYC stands for. But if you haven't heard of it, it basically is a set of regulations introduced by Patriot Act and after 9/11 that requires financial and other regulated organizations to collect customers' ID and other personally identifiable information, perform due diligence, and assess risks for money laundering and other fraudulent activities. Basically, it usually involves capturing customers' ID and the data that's present in the ID, and then screening them against various watch lists, including sanctions, PEPs, potentially optionally capturing their address information, and it can also involve various other types of checks. And often, all of this used to at least rely on manual processes. This was all done by either end user collecting their documentation, bringing it to the branch office, and then basically the flow went to the onboarding officer, compliance officer, bank teller, etc. And it was always a wasteful process before the automation and the tools that allow automation were introduced. To give you a quick kind of overview of how big of a challenge this manual traditional KYC imposed, average customer onboarding took around 10 hours in lending industry, and basically almost quarter of the expenses were attributed to the KYC and various compliance costs. In addition, the high friction, slow onboarding process has been observed to be the main reason of customer abandonment during the onboarding process, which often goes over 60%. And let's not forget about fraud. Almost half of fraud, financial fraud, is related to identity fraud, basically. And in 2023, it was over $40 billion. This doesn't even include the fines that regulators issued to the organizations, right? That were over $4 billion in various fines for either not protecting customers well enough or just intentionally, basically, going out of regulatory borders. In terms of not so obvious, but also crucially important bottlenecks that traditional KYC imposed on organizations, especially lending and other fintech organizations. Svetlanka, you mentioned already, basically constraining them in terms of geographies, in terms of markets. Smaller fintechs almost had no chance in efficiently scaling their operations overseas. It required local presence. It required regulatory know-how, and all of this was a huge resource hog. So what's changed? We're trying to the whole industry is trying to basically bring smarter KYC to the onboarding process, right? Full digital transformation in financial industry is heavily reliant on digital channels and therefore basically digital customer verification. So bringing automation to this process is crucial. Now, main parts of the flow, user flow, which is basically ID capture, data extraction and processing, authenticity checks, validity checks, screenings. All of this can be done with, using AI, especially with the advancement of AI. But at the same time, there's of course always a devil's bargain, right? With the advancement of AI, we also have increased threats for fraud, for identity fraud, based on deepfakes, synthetic identities, etc. An important aspect of bringing automation to the KYC is accommodating all of the traditional KYC workflows, right? The innovation is great when you don't have to compromise. You don't have to lose what you already have. So, for example, for say mortgage loans, or for like high value loans, customers want to our business customers as well as end users do want to interact, from our observations, do want to interact with the human compliance officer, or basically title officer, etc. And so bringing fully automated solutions sometimes is not quite enough. So solutions need to accommodate those type of hybrid workflows as well. And in terms of how one can build these type of hybrid solutions, right? Hybrid workflows that can both serve customers who are basically need instant gratification, instant access to services, that are happy to do fully self-service verification under a minute. They are already onboarded, versus customers who are undertaking larger high value transactions, or larger basically risk / value operations. There we need very robust but also very flexible, it's a contradictory, I know, very robust but very flexible solution that covers all aspects of identity verification, of KYC compliance, and can be rearranged in a modular way. So the main building blocks, I started saying this, but main building blocks basically are the core products that would be ID verification, AI capture, OCR, data extraction, and validity checks, right, to protect against fraud, identity fraud. Then we have human biometric authentication, so to speak, which we call it liveness check. It's basically authenticating the human who is getting onboarded is a real person. It's not a deep fake. It's not someone's video. It's not someone wearing a mask, being trying to be an imposter, and various other modules, including anti-money laundering screening, address verification, etc. So, and thankfully, so the innovation has brought us to the point where we can all build this type of solutions, this type of modules to arrange the solutions we actually need. And my recommendation for when a lending provider is looking at KYC solutions would be to consider these 8 or so factors, right? Svetlanka already talked about importance of considering data residency laws and various different certifications, SOC 2, data protection processes, how basically KYC providers adhere to these data privacy and protection standards. Those are fairly easy to check based on certifications that the providers have. IBITA level 2 would be the high standard for liveness check, for example. And what comes also into play when a lending group, for example, has brands in multiple markets is we have a customer who is operating in 140 countries, right? And they are using just one integration, one workflow for all of these channels and all of these deployments they have. And that makes that basically that puts onus on global coverage on us in terms of being able to capture and scan and recognize all the IDs from all of these countries, thousands of ID types. So these are types of factors that I would consider when looking at various KYC solutions. I'm biased, of course, but this is at least the questions we face with almost every customer we start working with. One quick example for an actual deployment, we recently had a funny kind of note that we actually whole story of Identomat starts from Ukraine. We were in 2019. We were asked by a fast loan provider in Ukraine to help them with customer onboarding and verification. And the project turned out quite well, and we decided to create a whole company around it, and the rest is history. And so fast forward to now, one of our great customers, a top Ukrainian non-bank financial organization, managed to onboard over 1.5 million customers in under 2 years, and this number was not even limited by our scale, right? It's you're limited by the market dynamics, but even that number would have taken if 10 compliance officers almost 8 years each to onboard that many customers, onboard and verify that many customers. And so this is just to demonstrate the power of automation, power of AI, and smart KYC in lending and financial industry. Now, I want to bring it back to you, Svetlanka, to kind of talk and maybe even showcase the power of unification, unified workflow, and the actual benefits we can deliver.
Absolutely. I'm happy to pick this up and demonstrate some of the unified workflows and how they're built in action. I will share my screen now again, and we'll go to a bit more lively part of our journey today, which is going to be a demo. So here we go. Welcome to the Neofin's Sandbox Workspace. Neofin is a comprehensive end-to-end lending automation platform that covers all the stages of the loan product's lifecycle, from origination to servicing. But today we're going to speak specifically about the smart automation of the digital onboarding and KYC parts of the lender's lifecycle. We have been working with lenders and lending groups for the world, and we can see that for all of them, the high priority is the ability to create custom user journeys that are tailored to specific cohorts of the users and that work effectively for conversions and other business metrics. There are two groups of functionalities you might want to have in your lending infrastructure to make this priority a reality. One is the implementation of the needed user journey on the backend side and full reflection of it in your database structure. At Neofin, this is managed through the form editor, a comprehensive space of building out the fields and managing all the necessary data fields that you need to gather during the KYC. Here you can see on the example of the client's questionnaire, you can see that you can manage the structure of the fields, you can manage the data validation principles, you can manage the names of those fields, the sequence of those fields, and all the necessary settings that you can take care of just through several clicks. So you can see the structure of these fields and you can manage them from the backend. How does that work for the user from the front-end perspective? At Neofin, we have a functionality that is called Site Builder. We call it a WordPress for lenders. So we've built out a content management system that allows for building the landing pages, user acquisition pages with a lot of pages templates and possibility to style and white label the front-end experience according to your brand style, fonts, and all the necessary branding elements. Here I go to the page, for example, fill client, just because it shows the same structure that we've used for the form editor. And here's how I can build out this page using the low-code functionalities, managing the styles, choosing the templates, uploading the right images, moving those images, managing the size of the fields. So how does the end result look like? If I go here, this is the form that has been created through the site builder with the exact field structure that we've managed through the form editor. Let's get started with some basic information. Here are the names, the address, the SSN, the phone number. And for example, using the same site builder, I can build out a page that is called identity verification during the onboarding journey. So the user can just do one click and is going to be passed to Identomat as a KYC solution that will allow for passing a liveness check or a video verification. Another important groups of functionalities for the unified workflows is building in the workflows that are created through the integration with KYC into the decisioning principles. Let's take a quick look at the underwriting studio of Neofin. This is where the decisioning engine lives, and now I am going to go to the rules. The decisioning engine allows for building out the risk policies, the underwriting strategies, build out the personalized offer engine. I'm just going today to the rules, and I want to show you the rules that I have quickly created just through several clicks and several seconds. This is the Identomat identity verification rule, and if I click for the rules, I can see that this is the rule that allows for the approval to the next step, for the check of the next rule. In case a very simple data attribute and a very simple check has worked successfully, like the client has passed the liveness detection, if this is true, the user is allowed for being checked for the next rule. So how does all the magic works when the customer clicks pass verification and is quickly checked for their liveness and for their documents? To explain this magic, I'm passing the word to David. Thank you.
That was amazing.
All right. Thank you for watching. And David, I guess it's your turn now.
Fantastic. All right. Let me share my screen to show what happens on our side. What's the secret sauce, how things work. And usually we prefer to work through our partners, like Neofin. Basically, when the integration is already done, it's ready to use and ready to go, no need to separately integrate Identomat, right? But there's also this option. You can get our admin panel and start integration. So we tried to make this process really fast and really convenient for anyone. Let me show you how, for example, one can create a fully functioning, new workflow configuration for, say, German market, which requires officer in the loop workflow, and we can start by naming this video KYC for Germany. But let's not forget, we want to bring all the AI automation tools to equip the officer, basically to make the work more efficient. I'm going to turn on the demoable public web app and move on to the building studio, workflow building studio, basically. So let me start with what we're going to do is we are creating a envelope, video chat envelope for identity verification steps. And let's also add geolocation. This is it. We can also fully customize each step, based on local requirements, based on organizational requirements. You can limit your end users to be only from certain countries, or all of them. It's all up to you. You can enable fully kind of live capture, or both live capture as well as existing ID photo uploads, etc. So I'm just going to leave this how it is and copy this demo page. Move on to here. This is the sessions page where you can see all the new sessions coming in real time, basically. You can also go in and examine the session details for review, for reporting, for decision making, etc. So going back to the demo of the end user interface. So this is what happens, right? I wanted to actually demonstrate this. The end user can start the workflow, can start the process on a device that might not have a camera at all, or just doesn't have access to the camera, which is this case. And in this situation, they have the opportunity to, I'm mirroring my phone on the right side. This is my actual phone. And what I'm doing is I'm scanning the QR code that our system generated by my mobile device that has a camera. And so I'm going to continue I'm going to disable my video here. I'm going to continue my verification process on my mobile device. So as you can see, as an end user, I can just call the compliance officer. In real time, compliance officer receives the call within the dashboard panel. And here we are. I apologize if you hear an echo. So compliance officer and the end user, this is a multi-party video chat. Up to 10 participants can participate. They can talk about, various, basically introduction, describing the process, all the stuff. You probably are better, acquainted with the process, what's going on with actual customer onboarding than I am. But compliance officer can then and basically kickstart the automated verification flow for the end user. So I'm going to start this as a compliance officer, and on the right we see the end user screen. This is basically Identomat screens are now being involved. I'm going to start my verification process using this specimen fake ID. This is just for this occasion. I'm going to choose driver's license. And the system automatically recognizes and captures the ID and extracts the data. So that's the ID capture part. Now it's time for liveness check. It's making sure I'm a real person, not a deepfake, or I'm not basically a video running on the screen. So in most cases, that would be it. This would be the end of the end user. But given that I also added geolocation step, now the system is asking me to enable location data. And that's it. As you can see, the data basically in real time shows up in the session detail page. Everything's there, every step, every action that end user made. And the session can be done with the officer. I'll say thank you to this handsome end user customer, and we'll finish this. So basically, let me enable my video. That's it. And this is a complex workflow, right? This is a hybrid workflow that I wanted to show with built-in automated parts in it. And all of these data pieces that are given in this session detail can be pulled by an API into the core system, into Neofin, basically populate the customer account. And there's also my real location here in Illinois. So yeah, that's it. That's kind of, and now I can make a decision. Now I'll approve this. That's what I want to show. And maybe
thank you,
bring
David.
it back to you. And
Thank you, David. And thank you, Svetlanka. Before we turn our spotlights to the audience, and just a reminder, you can all submit your questions in the Q&A box. I'll shoot some questions for Svetlanka, if you don't mind. So what would you say are the key building blocks you recommend when setting up a scalable lending infrastructure in a new region?
So whenever you need to set up a lending infrastructure in a new region, the building blocks would be: one is understanding deeply the regulatory and compliance climate of the region and adjusting the lending infrastructure accordingly, making sure that you are compliant from the technology and from the legal standpoint. Number two is understanding the local data climate and how you can be integrated in the local ecosystem. Local lending ecosystem, meaning the credit data providers, meaning the alternative data providers, meaning the local payment solutions, local communication solutions. And this is very important groundwork that has to be done before the new market is going to be launched. Another important thing is, of course, the market analysis and the business model, because the business model needs to be common for this geography and needs to be adjusted to the audience.
All right, thank you for your breakdown, Svetlanka. David, what do you see as the next biggest challenge in terms of identity fraud?
Yeah, that's a great question. Probably I would say it's still even with the advent of deep fakes, right? It's still, I would say, detecting screen biometric liveness. We see lots of attempts for such, fraudulent activities. For example, customers try to spoof the system by showing them images of either existing users or deepfake videos. So that would be the biggest one. That and video stream injection detection. So, I mean, this can get a little technical, but systems that can do well both are usually safer and higher performing systems. So, but it's always also, there's a balance between the safety, so reducing fraud and keeping the conversion high. So we try to not compromise on either, but that's kind of the main ongoing challenge. Keeping customers happy while making bad faith actors very unhappy.
All right, thank you for sharing your detailed take on the subject. And last question would actually be for both of you. How do you see the relationship between KYC and underwriting evolving? Do you think will there be a merge into a single experience layer eventually?
I'll probably kick this off from the lending infrastructure builder's perspective, because we already see a lot of overlap on that already, because it's quite a regular thing when the traditional credit bureau data is being used for both KYC and underwriting, or just as I showed on the demo, how the KYC data providers can actually be the data sources for the data attributes that are being used in the decisioning strategies and the decisioning policies. During KYC, we are gathering the valuable information, which is not just the contact details of the customers, but also the customers, parameters, the demography, the various important data, also on their device, on their reputation, and so on. And all of this valuable data can actually serve as data attributes for the decisioning, for building out the decisioning strategies. So from the technical perspective, from the I would say lending technology and lending operators perspective, there's already a lot of overlap, and I think it's only going to grow.
Yeah, I definitely agree with that. And from the other side as well, we even see actual demand now for basically credit data, transaction data as a proof of identity, right? As one of the facets of proof of identity. Like credit bureau is as old as, I don't know, any like fintech, but older than fintech, but it packages up the customer's credit history. Well, what we are seeing now is organizations actually asking for not just your standard credit bureau data, but also data like basically kind of consolidated transaction data from various fintechs, various organizations to discern real users from deepfakes and synthetic users, basically. So I see that lending providers and lenders themselves having this gold mine of data that can be used to reduce risk in terms of identity fraud.
Perfect. Yeah, thank you very much. I see we have one question popping up. Is Neofin used by banks? If so, in which countries? Is Neofin suited for complex loan products? Svetlanka, I guess you should take this one.
Yes, sorry, I was muted. Happy to address this one, and thank you for the question. While our key audience is usually non-bank lenders, Neofin is used by banks at the moment, and we have several locations where the banks are using us. We have locations in the Balkans, in Europe, and in the European Union where banks are using us. We have locations in Ukraine. We have Central Asia where it has been used by banks too. Speaking about the complex loan products, that would be probably our core expertise, because the system is built out to build complex loan pipelines and products, and sometimes we're dealing, like I would say it's a usual situation when we're dealing with the lenders that are on multiple products, or that are doing and building something unique or first of a kind in their market, something complex that was not done before. So yeah, absolutely we do.
Well, I hope that answered your question. I think we should wrap this up. Thank you all for attending. We hope today's discussion has shed some light on how smart KYC and loan automation are shaping the future of lending groups. A huge thank you to our speakers, David and Svetlanka, for sharing their insights and expertise. And before you go, a follow-up email with today's resources and recording will hit your inbox really soon. If you're ready to rethink your KYC or lending stack, let's talk. And if you haven't already, connect with David and Svetlanka on LinkedIn and keep the conversation going. Thanks again for being part of this, and we'll see you next time. Goodbye.
Thank you.
Thank you,
Bye-bye.
Maria. Thanks, everyone.